Wagwan guys, welcome to another video, and in today's video I'll be discussing about 3 stocks that I think are a buy right now. My name is Lance, and on this channel I discuss about personal finance and investment. Stay tuned. So in the coming weeks, I'll be discussing about some other companies that I think are undervalued and that I think are worth the buy. So subscribe and tune in for more information. But for today's video, I'm just going to discuss about these 3 companies. The first company that I'll be discussing about today is Drivv. Name is Limnas and Bards. Drivv is a full-service marketing agency and film production company, and the company primarily conceptualize, produce, and publish marketing media for corporate clients such as NCB, Grace Kennedy, and Digicel, and many other clients. The company earnings has grown on an average of 38% for the last 5 years. The company still has managed to grow its revenue by 25% year over year for the last financial year and 24.5% for the last quarter. The company's balance sheet is in a very excellent position. At this moment, the company has more cash than its total debt, and the price to free cash flow of this company is about 22%. Normally I go for companies between 10 to 15, but based on the growth of this company, I think this company is a buy for me, and I'll be investing in this company. At the point of this video, the Drivv was trading for $3.22, and it's a company that I expect significant capital appreciation over the next year. Second company on my list today is Cygnus Credit Investment, and this company is a credit investment company that specializes in providing non-traditional financing to medium-sized firms in the Caribbean. Medium-sized firms typically seek to expand and grow their business, and this company seems to find this niche of alternative financing outside banks and other institutions. So for the quarter ending December 31st, Cygnus Credit has grew their core revenue by 37.6%, or $1.1 million to a record of $3.7 million for the 6 months period. And regarding their net income, they have managed to grow that by 36.2% to a record of $2.28 million. So 3 reasons why I want to buy this company is because of its high revenue and income growth. Second, the company is well diversified across countries and industries in the Caribbean. And thirdly, based on the metrics that I'm seeing on the book, it has a PE ratio of 5.85 at the moment, a book value of 1 time, and book value per share of 30, return on equity of about 11%, return on assets of 8.6%, which is very good for this particular industry. So I think this company is a buy for me. And when you look at net asset has grown from 37 to 87 million over the last 3 years at a compound annual growth rate of 24.14. Regarding debt to equity, the company has a low debt to equity of 0.31. The company recently did a bond raise, and according to the company's directors, the aim of this private placement is to fund robust growth and other opportunities in the company's investment portfolio. The company's growth is not subjected to taxation because the company is incorporated in St. Lucia, so the company only pays about 1% tax, which is another strong point why I like this company. So the third company on today's list is Stanley Motor, and the company trades under the ticker symbol SML. It's a Jamaican real estate company that is primarily involved in the rental of properties and venues. The company has a low debt ratio of 0.16, a FFO of 16.5, and FFO is what we use instead of PE ratio, because PE ratio is distorted when it comes out to real estate companies. FFO excludes one-time sales of assets, so we only can use income generated from the company's core operation. Stanley Motor compounded annual growth rate for the last 3 years has been about 22.2%, which is very good for this company, and revenue for 2021 was 4 million. Cash from operations has seen a continual improvement, going from 242 million to 327 million. This is at 26% year over year, and for the last 3 years this would be a compound annual growth rate of 10%. The price to free cash flow is 13 times, and this is a stock that pays a dividend yield of 4.5%, making it one of the top 10 dividend stocks on the Jamaica Stock Exchange. So that's it, folks. Those are the 3 companies that I'll be buying this week. You can subscribe, because I'll be talking about 3 more companies this week that I'm watching and looking closely at. So like, share and subscribe. I'm out.